Hello traders, this is Hugh. Today I want to show you a quick way to calculate the risk on your trade. I frequently go to a couple of the Forex forums out there and I try to help out beginners when I can. And one question that came up quite a bit was, how do you calculate the risk on your trade? And a lot of people give answers that relate to leverage and fancy calculations on the how much one pip is worth, and I think that's just really confusing. It's really not that difficult. So hopefully this video would help out the beginners who um, are trying to figure out their risk when they enter the trade, so that they know that they're not gonna take unnecessary risk. So as you can see here, I have a demo account on the screen from Owanda, or with Owanda, and this demo account has $1,000 in it in fake money. And in order to figure out how much risk you should be taking, first of all, you have to figure out what percentage of your balance you want to risk. And generally, the best thing to do is to start at about 1%. I know a lot of people a lot of beginners especially like to gamble, and they say, oh, I'm going to put down 50%. But no, that's not the way you want to be doing it. You want to start off small and protect your capital. So 1% of $1,000 is going to be 10 bucks. And the reason why I choose to use Owanda is because you can start off with a very small amount of money, but you can still vary the lots enough that you can have a small risk like $10, but still have pretty much any stop loss that you want. So in this case, $1,000, your risk is going to be 1% or $10, right? So let's say that we're looking at the pound Swiss here, and I'm just going to put in a fake order here. When I click on that button, it brings up the order screen. So what we're going to be looking at here is putting in a stop loss. So let's just leave the default stop loss. If we bought the pound Swiss at the current price of 44.64 and we had a stop at 44.38, that would be a 24 pip risk, as you can see down here. Now what you want to do is input the units. So the great thing about Owanda is that they provide nano lots, which are very small trade sizes. Most brokers will only give you 3 sizes of lots: full sizes, mini, and then micro. But then Owanda goes one step more and goes down to nano. So in other cases where you have to trade 100,000 currency units, 10,000, 1,000, Owanda allows you to go down to 1 currency unit. So that's the great thing. So you can really tailor your risk to your account size. So for example, let's start off with 100 units. That's kind of the base if you're trading a small account like this. And based on this stop loss, you can see all of the stats down here. So your stop loss would be, for that stop loss, you would be risking right now about 20 cents. And the value per pip on this pound Swiss for this small account size or a trade size would be a penny per pip. So like if you put in 1,000 up here in the units, then it will change accordingly. So 1 pip would be 11 cents. Your stop loss, for this stop loss, the risk would be $2.28. So as you can see, that makes it super simple just to see your risk at a glance. And once you start changing your stop loss, as you can see, the risk will change accordingly. So you can see that really easily there at a glance. And then the only thing you want to do now is you want to change your unit size so that your stop loss is a little bit less than your maximum risk of 1%. So in this case, our max risk is $10, right? So we want to get this number up to about $10. So if we did 3,000 units, That's roughly $10 there. So maybe we want to go a little bit less to be a little bit more conservative. So maybe 2,800. And there you go. It's a little less than $10. So now we can enter the trade because we know that we'll be risking. Oh, it just jumped up there, but at the time. So if we wanted to adjust that again, we would go down maybe to 2,500 and keep that under $10. So that's the way you do it. It's pretty simple, and you don't have to go through all these fancy calculations to figure out the leverage and the cost per pip and all that stuff. So I'm only using Oanda as an example because that's the broker that I use, but I've seen other brokers who have similar order screens, and it makes it really easy to see it. If your broker doesn't have it, then you may consider looking at other brokers who make it much easier to figure out your risk at a glance when you enter your trade. So I hope that helps, and if you want to find out more information, more tutorials, check out tradingheroes.com. Thanks for watching.